Warren Buffett's biggest investment for his holding company Berkshire Hathaway in the last quarter is not going to show up on the Berkshire Hathaway equity portfolio. And that's because the US regulatory body SEC sometimes permits confidential treatment for new stock purchases, exempting them from the required disclosure via 13F filings. And Buffett actually received an exemption in Q3, so at least for now it remains a mystery what Buffett was investing $1.7 billion into. And in this video we're going to speculate what his new investment might be. So without further ado, let's get started. Okay, hey there, my name is René Zellman, and in this video we're going to talk about what the new investment that Warren Buffett was making but not disclosing could theoretically be. And I will actually discuss one particular company, one very interesting company, in quite a lot of detail in this video. So please make sure to stay around. Let's have a look at the table of contents real quick. So first of all, I'm going to give you some more context around the undisclosed position or new investment by Warren Buffett. Then after that, we will speculate what that stock theoretically could be. I will give you a brief business overview of the business that I think Buffett could be building a bigger stake in. And finally, we will of course also discuss the risks of that particular business and take a look at the valuation, which, spoiler alert, is trading at a historically low level. All right, so as we highlighted in the introduction of the video, Berkshire Hathaway is building a new position that it is not disclosing as of now. So let me just show you the Q3 activity of Berkshire Hathaway. What you can see on screen right now is basically the equity portfolio activity over the course of the last quarter. And while it's always interesting to take a look at what positions Buffett is selling, buying, or trimming, or adding to be fair, we have to say that all the activity that you can see on screen right now do not really move the needle for Berkshire Hathaway. As I am pointing out on the right hand side, basically the percentage change of each of these investment decisions is around the 0.0x percentage point range. But as I was saying, there is another position that Berkshire is building that is going to move the needle a little more. On screen right now, you can see an excerpt from a recent Barron's article, and here it says, Berkshire Hathaway sold off its remaining holdings of General Motors in the third quarter as the car maker's shares retreated. The Warren Buffett-led conglomerate also asked the Securities and Exchange Commission that one or more of its equity holdings be kept confidential and omitted those holdings from its 13F filing. And some of you might be wondering, well, why would Buffett ask the SEC to do that? Well, there is a very well-documented effect called the Buffett effect that highlights that whenever Buffett is buying a stock, this actually starts moving stock prices because people are so aware of Buffett's fantastic stock picking abilities that they will just blindly copy him and basically join him in that investment. So the reason why Buffett would occasionally request confidentiality is that Buffett wants to increase that position a little more, but doesn't want the stock price to go up so that it doesn't trade at a, for him, attractive valuation anymore. Buffett actually has done something similar in the past, in 2020, for example, when he was accumulating stakes in Chevron and Verizon Communications. He was also asking the SEC not to disclose those new investments immediately. And speaking of the Buffett effect, I also want to point out there is actually also research that backs up the claim that if you just copy what Buffett is buying and selling in each quarter, whenever the 13F filings have to be disclosed, so that's a little after the quarter, usually I think 6 weeks after the quarter ends, you actually do quite well. Historically, you have beaten the market if you have simply cloned Buffett's picks. And yeah, so I think you will be able to understand why Buffett sometimes chooses to not disclose new investments that he wants to increase in size over time. However, I have read that this new position will be somewhere in the range of around $1 to $2 billion. And if we compare this to the entire size of the Berkshire Hathaway equity portfolio, so that's the portfolio consisting of publicly traded stocks, which as of today is around $13 billion. Still, it's not a massive investment, but you got to start somewhere, and maybe Buffett will continue to invest into that particular stock. Again, we don't know which one it is as of now, and will grow it over time and make it a larger position. So shall we speculate a little bit what that new investment could be? Please let me know in the comments down below whether you have any ideas. what you can see on screen right now is basically Ryan Henderson. He's one of the hosts of the Chit Chat Money podcast, speculating whether the new investment is in a company that is creating, selling a ton of different alcoholic beverages. And I will tell you a little more about this particular business now. So what is the new stock and is it worth taking a closer look at? And spoiler alert, I absolutely think it is. And after you have watched this video, I hope some of you will take a closer look at this stock. Maybe a little disclaimer here, I'm not a shareholder in this business as of today. I might be in the future. I'm not entirely sure how enticing I personally find the valuation as of today, but I just wanted to put this out there. All right, so the company that we are going to talk about today is called Diageo. I'm not entirely sure about the pronunciation, I actually double checked it beforehand, so I hope I get this right. Diageo, and it's one of the largest alcoholic beverage producers all around the world. More specifically, it's known for being a spirits producer, but we'll get to that in just a second. So you can see the logo on screen right now. Basically, the stock's 52-week high was 38 pounds, and you can already see it's a different currency. So the stock is actually trading on the London Stock Exchange, and the 52-week low was 27 pounds. The ticker is DGE, and just to give you a brief overview of the business, Diageo, together with its subsidiaries, engages in the production, marketing, and sale of alcoholic beverages. As I just said, it offers scotch, gin, vodka, rum, raki, liquor, wine, tequila, Chinese wine, Chinese white spirits, kagachar, and brandy, as well as beer, including cider and flavored malt beverages. I might have mispronounced a couple of items here. So let me just show you a couple of the very well-known brands that you can find under the Diageo umbrella. I'll zoom in a little bit so you can maybe recognize the brands a little better. And I want to challenge you here. How many of the brands shown on screen right now do you actually know? Personally, I knew 6 of the brands, so I guess that's not a very impressive performance. But to be fair, I'm really not an alcohol consumer. I drink very rarely, I don't know, maybe once or twice a month, and then just 1 or 2 drinks. So I'm probably not the target group of Diageo, but in total, there are even 200 brands under the Diageo umbrella. All right, let me continue to provide a very basic overview of the company. So it is operating clearly in the beverages industry. Its market cap as of today is 62 billion pounds. The enterprise value is actually quite a bit higher. It's 80 billion. So you can already tell here that the company must carry a lot of debt. We'll get to that in just a second. There are 2.2 billion shares outstanding. We just mentioned the debt side of things. So long-term debt is 15.2 billion pounds. Then we've got total liabilities of around 26 billion pounds and cash and equivalents of 1.4 billion pounds. There are 30,000 employees employed by the company. So again, this is supporting the idea that this is a very big corporation. Over the last 12 months, it was producing 17.1 billion pounds in revenue. The company does actually pay a dividend. The dividend yield is, as of today, 2.3%, which represents a payout ratio of 48.8%. And the 5-year dividend per share growth rate is 4.1%. All right, the graphic that you can see on screen right now is actually taken from the most recent annual report of Diageo. What you can see here is basically the market share of the Diageo brands in different geographies from all around the world. And at the bottom, you see the number of units sold in the different geographies, as well as the revenue generated in North America, Europe, Asia Pacific, Latin America, and the Caribbean and Africa. And what you might also notice here is that the company is actually very well diversified in terms of where it is generating revenue. All right, another interesting takeaway from the annual report that I show you on this slide here is that the business seems to be moving into the higher tier, the more premium segments of the alcoholic beverages industry. You can see that the super premium segment represents a larger percentage of the total revenue as of today compared to 2019. And the standard, and as they call it, value segment is actually declining over the more recent years. What you can see on the right-hand side here is the reported revenue generated by the company in the different segments. You can see that Scotch is actually the largest segment, followed by beer, tequila, and vodka. So let us very briefly talk about some of the competitive advantages that the company might possess. And I've actually identified quite a few. And I think I'll say this right away. I think Diageo is a very high quality company with strong barriers to entry. So first of all, you have to think about the brand strength of the different brands that you can find under the Diageo umbrella. And if you think about brand strength, you have to realize that just recognizing a brand might not be valuable on its own. So instead you have to assess whether that brand strength and brand recognition can actually be translated into pricing power. And I think in the industry of spirits, this may be particularly true, especially if you own premium spirit brands. And I think Diageo actually owns a ton of premium brands. And I think those brands cannot easily be replicated. So I think there are two main ingredients that you have to consider when it comes to actually building a brand: time and consistency. So oftentimes it will take quite a lot of time to actually build a brand. I've just highlighted a couple of brands that you can find within Diageo. So Guinness, the beer brand, probably the most well-recognized beer brand all around the world, was actually founded in 1759. Then we've got Smirnoff vodka, which was also founded more than 100 years ago. Then we've got Bailey's, which is half a century old, and Johnny Walker is also like 2 centuries old. Yeah, and I think two elements that are maybe important to consider when assessing the brand strength of the Diageo alcoholic beverage brands is they may convey prestige and trust, and they may just overall reduce search costs. So if someone is going into the supermarket looking for, I don't know, a high quality vodka, he might just grab the Smirnoff bottle, and yeah, without spending too much time thinking about which one to pick, which one might be the best value offer, people might just go for the Smirnoff brand just because they know it. They know it's a well-recognized vodka brand, and they trust the brand that it will be of, superior quality. And then another competitive advantage you might want to consider here are scale advantages. Diageo will benefit from its massive distribution network. I have previously shown you the graphic that shows the market share in different geographies from all around the world. You can once again see how much revenue the company is generating in North America, Europe, Asia Pacific, and so on and so forth. And obviously the global scale of Diageo will allow it to actually acquire companies maybe at a slightly elevated price, because they can still earn a high return on that acquisition just because they have the global scale and can distribute the products all around the world basically. And then two other factors that might be considered in the context of scale advantages is that the company will have bargaining power over suppliers and obviously have a larger marketing budget than some of its competitors. All right, let's briefly look at the financials. So what you can see on screen right now is the development of revenue over the last 12 to 13 years. And what you can see is that the company pretty much consistently was able to grow its revenue. Revenue has basically doubled over the last 13 years, which is not an insanely high growth rate, but I think the revenue growth also going forward is fairly consistent and predictable, and that's also a very important factor to consider. Then operating profit has pretty much grown at the same rate. It also doubled over the last 12 to 13 years. The operating margin is actually incredibly high. It's somewhere in the range of, high 20s, low 30s, which very few companies actually can achieve. And again, I think this kind of supports the idea that the company does have a lot of pricing power, which will lead to these elevated margins. Then next up, we've got free cash flow, which, unlike operating profit, which is to be expected, fluctuates a little more heavily. And I don't know, the development here is a bit worrying. I would have to dig deeper into the company to find out why the free cash flow has been declining more recently. To me, it kind of looks like the company might be in a reinvestment cycle, because I only spent like 1 or 2 days studying the company. And then finally, what you can see on screen right now is the return on capital earned by the company. Considering that the company is producing very high margins, it doesn't surprise me that the return on capital metrics over time also look very favorable. All right, next up, let's quickly talk about the risks the company might be facing. I have identified 3. So first of all, beer has been losing market share for quite some time. And as we've shown previously, beer is actually the second largest category for Diageo. However, as we have shown, while beer might be the second largest category for Diageo, the beer category actually only accounts for around 15% of total revenue. And so the company might actually benefit from that shift in the consumer preferences to spirits. Then another thing to consider, in my opinion, might be the rise of private labels. Many other companies that are maybe producing consumer packaged goods, they are struggling because private label has been on the rise. I'm not entirely sure to what extent the rise of private label will affect the alcoholic beverages industry as well. I think there's still a lot of prestige and trust associated with the leading brands in the different categories, as we discussed before. But I don't know, I think it's a risk worth being aware of, and you might let me know in the comments down below whether you think this is a serious risk for the long-term thesis of companies like Diageo. And then finally, I think there's also a shift that I recognize in my social circle as well, kind of a shift towards consuming less alcohol. I just highlighted that I myself don't drink a whole lot of alcohol myself. Yeah, I've actually found a lot of different data showing that in the Western countries in particular, alcohol consumption has been in decline. And obviously, this is going to be a headwind the company might have to overcome. All right, finally, valuation. I will show you two charts here. This first one is basically showing you the enterprise value to operating income multiple of Diageo over time. And what you can see is that the company is now trading at an almost historically low multiple. It's trading at an EV to EBIT multiple of 15. The last time the company was trading at a multiple this low was in 2014. So at least considering its historical valuation, the company seems to be rather cheap. Which, to be fair, doesn't mean that the company is cheap on an absolute basis. However, what this chart here is showing that Diageo also seems to be fairly cheap compared to some of its competitors. I've picked 4 competitors here, and of all 5 companies that you can see on screen right now, Diageo is trading at the lowest EV to EBIT multiple. So why are we linking all of this to Buffett? Well, I think Buffett has a history here because Berkshire Hathaway actually bought a stake in Guinness in the past, and Diageo was formed in 1997 via the merger of Guinness and Grand Metropolitan. And what I'm showing you on screen right now is basically an excerpt from a Berkshire Hathaway shareholder letter. I think it was the 1993 letter, might be off here. And let me just read to you what Buffett was writing about the Guinness business. And obviously, Buffett is very well known for his Coca-Cola investment. I think the company of Guinness and Diageo, they actually have a lot of similarity with the Coca-Cola business. Although I think Guinness has a much longer runway than Coca-Cola does nowadays. So he wrote, "Our Guinness holding represents Berkshire's first significant investment in a company domiciled outside the United States. Guinness, however, earns its money in much the same fashion as Coca-Cola and Gillette, US-based companies that garner most of their profits from international operations. Indeed, in the sense of where they earn their profits, continent by continent, Coca-Cola and Guinness display strong similarities, but you'll never get their drinks confused, and your chairman remains unmovably in the Cherry Coke camp." Alright, just to get back to the beginning of today's video, to be fair, I don't think Diageo is the undisclosed position by Buffett. And that's because Berkshire Hathaway actually already possesses a stake in the company, although that stake is actually tiny. It represents 0.01% of Berkshire's equity portfolio. And I'm not exactly sure about the SEC rules here, so I'm not sure if Buffett could actually not reveal that he was increasing a position he already has. I think that's probably not the case. So in all likelihood, it's a different position that Buffett is secretly building as of today. All right, that's it for today. Let me know what you think this secret mystery position of Buffett might be, and I'll see you in one of my next videos. Take care.